Welcome to Factful Finance. Have you ever wondered how some investors are making money even when the stock market is unpredictable? What if I told you the secret might be hidden in the world of AI stock market trading and algorithmic investing? In today's deep dive, we're tackling the big question: how can you leverage AI to profit in the stock market? Let's dive in. AI and algorithmic trading are rapidly transforming the way investors approach the market. From analyzing massive amounts of data to executing trades at lightning speed, AI has brought a new era of efficiency and potential profit. But how do you, as an investor, navigate this complex landscape and turn AI into a financial tool? Let's break it down step by step. Understanding AI in stock market trading. AI stock market trading refers to the use of machine learning algorithms and artificial intelligence to analyze market trends, identify patterns, and make buy or sell decisions without human intervention. Think about it like having a supercharged, never-tired analyst who can process tons of data, both structured and unstructured, in a fraction of the time it would take a human. In fact, AI can analyze news articles, earnings reports, tweets, and other sources to predict stock price movements before they happen. Algorithmic investing, a key component of AI trading, uses preset mathematical formulas to automate investment decisions. For instance, a simple algorithm might decide to buy a stock when it hits a certain price point or when technical indicators suggest a good entry opportunity. This removes the emotional aspect of trading, reducing impulsive decisions driven by fear or greed. The power of machine learning. So, how exactly does AI learn to trade? Through a process called machine learning, AI systems are trained using historical data. The more data they have, the better they get at making predictions. Over time, the AI can identify subtle patterns in the stock market that humans might miss. Machine learning algorithms can analyze data such as price patterns, recognizing when a stock is overbought or oversold; market sentiment, measuring emotions in the market based on news or social media; economic indicators, tracking GDP growth, interest rates, and other economic factors to predict market trends. With these capabilities, AI can not only make decisions based on hard data, but also adapt to market changes, improving its predictions as it processes more information. The benefits of AI stock market trading. Now let's talk about the upside. First, AI can process far more data than any human trader. Imagine trying to read every article, watch every news segment, and analyze every stock report. That's what AI can do in seconds. This means faster, more informed decisions, which could lead to higher profits. Second, AI removes emotion from trading. Human traders often fall victim to FOMO, fear of missing out, or panic selling, which can hurt long-term profits. But an AI-driven algorithm sticks to its strategy, making decisions based purely on data, not emotion. Lastly, AI offers scalability. Whether you're managing a small portfolio or billions of pounds in assets, AI systems can execute trades at scale, something that would be impossible for a human team to replicate. The risks you need to consider. But as with any powerful tool, AI trading comes with its risks. One of the biggest challenges is the possibility of overfitting. Overfitting occurs when an algorithm is too closely aligned with past market data and fails to adapt when conditions change. For example, in 2008, many automated trading systems failed when the market experienced unprecedented volatility. Additionally, AI doesn't always understand the bigger picture. While it can analyze data, it can't always factor in macroeconomic changes, geopolitical events, or human psychology in the same way an experienced investor can. That's why it's important to keep a watchful eye on AI-driven strategies and ensure human oversight. How to profit with AI. So, how do you make money with AI in stock market trading? Here's a simple roadmap. 1. Leverage AI for technical analysis. Use AI-driven platforms like MetaTrader, TradeStation, or QuantConnect, which integrate machine learning algorithms into trading strategies. These platforms can help you identify market trends, spot potential buy and sell signals, and automate trades based on predefined criteria. 2. Diversify your portfolio. Don't put all your eggs in one basket. Use AI to help you diversify your investments across different asset classes, industries, and geographies to manage risk more effectively. 3. Set clear objectives and parameters. While AI can optimize your trading decisions, it's essential to have clear risk management strategies in place. Set stop-loss limits and profit-taking goals to protect your investments and ensure AI systems stick to your risk tolerance. 4. Backtest strategies. Before using AI to trade with real money, backtest your strategies using historical market data. This helps you understand how your AI algorithms would have performed under different market conditions and fine-tune them accordingly. 5. Consider hybrid approaches. You don't have to rely solely on AI. Many successful investors use a hybrid approach, combining the insights of AI with traditional fundamental analysis and human judgment. This can help you make more well-rounded investment decisions. Real-world example. Let's take a look at a real-world scenario. Olivia is a retiree who wants to supplement her pension using AI stock trading. She's new to algorithmic investing but sees the potential. Olivia starts by using a robo-advisor that uses AI to assess her risk tolerance and suggests a diversified portfolio of UK stocks, bonds, and commodities. She sets up a strategy where the AI automatically rebalances her portfolio each month, selling overperforming assets and buying undervalued ones. 6 months later, Olivia sees a steady increase in her portfolio, outperforming a traditional index fund by 3%. She's happy with her results, but she continues to monitor her portfolio and makes adjustments based on market conditions, ensuring that the AI stays aligned with her financial goals. The bottom line: AI in stock market trading and algorithmic investing is not just a passing trend. It's a game changer that's already reshaping how we approach investing. By harnessing the power of AI, you can make faster, data-driven decisions that could lead to greater returns. However, like any investment strategy, it's crucial to understand the risks and limitations and maintain a disciplined approach. If you're considering AI trading, remember, always consult with a certified financial professional before making any significant changes to your investment strategy. This content is for educational purposes only, and any apps, products, or services mentioned are not endorsements. Personal guidance from a professional can ensure you're making decisions that align with your unique financial situation. What's your take on AI trading? Do you think it's the future of investing? Or are the risks too high? Let me know in the comments below. I love hearing your thoughts. If you found this video helpful, hit the like button and subscribe so you don't miss out on what's coming next. Looking to level up your financial strategies? You won't want to miss what's up next. Stay tuned.